There we go. And I went back to the Fibonacci retracement tool this week. I hadn't used it in a while, but I'm like, oh, I don't want to get rusty. So yeah. Okay. There we go. All right, so let me move this. All right, so we're going to go over the basics. You know, trading, it's all about the basics. We're always going to talk about the process when it comes to getting into the market. So we're going to start there. And we know we're on the road to 5 figures, right? And we're approaching November. We have a little less than a month to go with this. Oh, okay. Let me leave the Zoom on my phone now. All right. So I'm excited for what the next few months have in store for us. You know, December is coming, all the holidays in between. I don't care for the one that's coming up first. It's not a holiday, but people put it up there, Halloween. I look forward to eating as I normally do every day, right? But Thanksgiving, I look forward to eating. Christmas, I look forward to eating. So yeah, if you didn't guess by now, I'm a fan of eating. So anybody want to send me a gift of a night out at some restaurant? That'll do, okay? I appreciate it. But anyway, all right. So on this road to 5 figures, there are a few things that we do. First, we go to the compound calculator, and that's where we're going to decide our daily target, right? Because I say this all the time, you need to have a plan. I'm switching. Hold on one second. Let me switch. There we go. Decide. Oh, hey, Shanitra. What's going on? You should actually come to the Zoom. Hey, and hello, Steppa. All right, so we need to have a plan. And why do we need to have a plan? Anything that you're doing in life, you need to actually have a predetermined goal, and then you'll take the steps that you need to take in order to get there. If it's something you want to accomplish in a year, you may have monthly goals, which can then be broken down into weekly goals, you know, because you don't want to tackle one big thing all in one. You want to tackle small things, which as you complete the smaller things, it'll get you to the bigger things. So we use the compound calculator. We go to compounddaily.org, and we should know what our target is, whether it's to grow our account by 5 or 8% per day. We need to know. So we go to compounddaily.org. Make that big. Okay. And then compound daily interest calculator, that's the first one. That's what you would select. And say you start with $100, right? You know, say you want to make $10,000. Say that's the goal. Like road to 5 figures, right? 10,000 is 5 figures. You can start with $100 and accomplish that in a predetermined amount of time. You may fall a little bit short, but that's okay. But at least you have your goal and you're going to work towards it. So say you start with $100. You want to grow that, say 8%, which is really ambitious. That's for the people who are more seasoned. If you are new, you may want to aim for, say, 2 to 4% in a day. And that is really awesome, because we know that if we put $100 in a bank account, whether it be checking or savings, you can't anticipate to see that kind of growth in a day. As a matter of fact, you can anticipate loss because you don't have enough of a minimum balance, right? So the length of term, we're going to do 60 days, that's 2 months. And we're not going to take anything out. We're just going to keep growing that money. We plant the seed and we just want to wait until it's harvest time. We're not going to pull anything out when it's green, right? So we're going to reinvest 100% of what we make every day. And the market is closed on the weekends for traditional currency pairs. So we're not including weekends. So the market is closed right now. So based on this, you can anticipate, if you're a robot, doing perfect math, that by December 31st, you'd have over $10,000, $10,125.52. Now, we are humans, so we're not perfect, and there is room for error, right? And when it comes to any kinds of investing, you're not going to get it 100% of the time. There are losses associated with investing, but you just have to manage your risk. And that's how you can still come out on top, right? But so this is $10,000 if it's perfect math. But let's say, because we're imperfect, we did just 50%. We made $5,000. Could you be okay with $5,000 given that you would
Yeah.
that? Thank you. Yeah, definitely. Right. So, and when you break it down, you want to make your 8% every day. You're not going to risk 8% of your money in any one trade, right? Let's take a look at this again. So that goes on to the risk, right? So with the growth, yes, we want to grow between 5 to 8% every day, but we're going to risk 1% per trade, right? Because if you risk the full 8% and you incur a loss, it's not a successful trade idea. That would be an 8% lesson right there, and you have to stop. See, what we say is there are 2 times you stop trading. You stop trading when you hit your target. You also need to stop trading when you take a 5% lesson. If you're growing your account by 8%, then you stop when you hit 8%. If instead of growing it by 8%, you find that you incur a 5% lesson, going to the opposite side, you need to stop trading, right? And that's how we manage risk. Now, of course, if you're only growing your account by 4%, you can't stop at 5% lessons. You need to stop at, say, 2% or 1%. You just have to manage it the right way. So let's go back. Let's see here now. The next thing you're going to look at is the Forex Factory, right? So we know what we're going for. We know how much we want to trade. And I say that as a new person, you want to risk 1% of your account per trade idea, right? But you need to know what you're going to trade, right? There's so many different currencies to choose from. How do you determine what currency pair you're going to actually analyze in order to jump into the market? That's where we need to check the news, and that's where forexfactory.com comes into play. So we're going to go to forexfactory.com, and the date, the time, the currency, and the impact are here. So today is Saturday, October 9th, and we see nothing here. The reason there's nothing here, actually, let me ask, Brian, since you're interacting with me, let me ask you, do you know why there's nothing here on Saturday in under news?
Because one, it's the weekend, and would it be because, well, I don't know if they acknowledge that holiday. Maybe they do, the bank holiday that's coming up Monday.
So because it's Saturday and the market is closed on the weekend, that's nice. Yes. So the market is closed, so we're not going to see anything. The market opens on Sunday, that tomorrow at 5 p.m. Eastern Standard Time. But looking here, it appears that there's absolutely nothing at all going on Sunday evening. The first news event is at 2 a.m. Eastern Standard Time on Monday, right? And that's going to be for the Japanese yen, and the impact, it's a yellow folder. Now, in terms of impact, there are three different colors you want to pay attention to. There's yellow, which is low impact. There's orange, which is medium impact. And there's red, which is high impact. And we see that from Monday 2 a.m. all the way till Tuesday at 5 a.m. That's when you have the first orange impact folder, right? Medium impact. Wow. No red folder until Wednesday, October 13th, and that will be at 8:30 a.m. Now, when you see a red folder, you want to stay away from that because, as I said, it says high impact. So on Wednesday, October 13th at 8:30 a.m., I know that I'm not going to be trading anything that is paired with the US dollar, right? So when I'm going to be trading and the US dollar has a red folder, I've found with experience, I've been trading for a little while, that I just want to stay away from any currency period at that time, right? So at 8:30, I would take a pause and I probably would not look to get back into the market until around 9 o'clock. Then I will look at other peers. I still wouldn't even want to be looking at any US peers, to be honest. That's what I've noticed, right? So there are some people who, once a currency has any kind of folder on it, whether yellow, red, or orange, they're not going to trade that currency. And that is fine too, because there are so many different currencies to choose from. Now, the gray folder represents a bank holiday, and we know Monday is a holiday. I think it's Columbus Day. I think that's what it is. I can't really remember. But so on Monday, there's a bank holiday for the US and Canada. For me personally, that's not going to deter me from trading either one of these, right? Other people, they're just not going to trade it, but I don't have a problem, right? So we know that come Sunday evening, nothing is off the table. We have a buffet of different currencies to look at. So once we've decided on that, then we're going to move now again back to our chart. Let's see what's next. Okay, so after Forex Factory, then we want to check the currency strength. So once you've decided on what currencies you're not going to trade, you're gonna jot it down. We know at this time we're not doing this. We know what we're trading. We want to come check the currency strength because we need to know in what direction we're going, right? And when the base or the first currency is greater than the quote or the second currency, we're looking for bullish ideas. We're looking for buys. We're looking for price to go up, right? And so we go to, there are two sites that I look at. There's livecharts.co.uk, right? And I select currency strength meter. And with this, if you can count bars, you're all set, right? So if the base is stronger than the quote, the base is going to have more bars than the quote. So here, Euro JPY is appearing where the base has more bars than the quote. So we would be looking for bullish ideas. We'd be looking for price to go up, right? Because we all know a bullish candle, price starts at the bottom, the candle opens at the bottom and goes up. So the thing that I do not like about livecharts.co is that, you know, the currency strengths change over time, but you're not going to see it update in real time on this chart. You always need to be refreshing the screen before you actually execute any idea that you decide that you're going to take, right? So as an alternative, I like, I'm off. This is the wrong thing. Sorry, keynote. As an alternative, I like to use finviz.com. Finviz.com has it as a little, oh, sorry. I accidentally opened that. Has this bar at the bottom, and to the far left, we have the strongest currency. To the far right, we have the weakest, right? So I would look at this and I would decide, okay, I just looked and said Euro JPY, and we see here Euro to the left, JPY to the right. So if the base falls on the left side and the quote falls on the right side, I know that I'm looking for bullish ideas. I'm looking for buys. I'm looking for price to go up. And that's more of the language that you'll hear in the academy going forward. You're going to hear bullish, okay? Now, it's not only bullish ideas that are out there, there are also bearish ideas. So a bearish idea is when you think price is going down, right? It's going to be for a put, it's going to be for a sell. And a bearish idea is if the base is on the right side and the quote currency is on the left side. And I see here AUD, CAD, odd CAD is an example of that, right? But we know that the market is closed right now. So things are just flat lines, just we can't do any analysis in the market. So this is all just looking at something that's what this was at the close of the day, 5 p.m. Eastern Standard Time, Friday, yesterday, right? But that's how it is. Does anybody have any questions? No questions? Okay, perfect. All right, so nobody came to me with any questions throughout the week, but there's one question that's a recurring question. How much time per trade? Now, I personally am doing binary options, which is a time-based style of trading, right? And so you want to make an educated guess based on the market conditions, and you just need to be accurate in your analysis for the duration of the time that you're in your trade. to have a successful trade idea, right? Now, we enter on the 5-minute chart. So since each candle is equal to 5 minutes, whenever the new candle opens up, you can take a trade for between 1 to 5 minutes when the candle opens, right? If it's a bullish idea, it's 1 to 5 minutes going up. If it's a bearish idea, 1 to 5 minutes going down. Now, if you're trading with Kenvry, he says 3 to 5 minute idea. He's not going to say anything more precise than that, but he's doing 3-minute trades, just to let you know, because before he had to change his language on his sessions, he was telling us 3 minutes fixed time. That's what he was doing. So I highly suspect that that's still what he's doing, but they just had to change up their language. Now, as you guys know, we have our sessions that we do on a Wednesday. If you come to that session, I'm doing 4 minutes fixed time for my trade ideas, right? But if you get on, you're using your demo account to practice before you're using your real account, you can determine whether or not that time frame works for you. That's what's comfortable for me right now. That's what I've landed on at this time. Ty is also giving out trade ideas on the very same call, and she's doing 1 minute fixed time trades when she gives out the call idea. Her trades, she's calling them out right when the new candle starts, right? And it's been really working for both of us, right? So let's keep that in mind. Now, when it comes to trade idea, you're waiting on if you want to get into it for 5 minutes, you got to make sure that you get in right at candle open so that you don't find that you're going over the time, right? Now, if you're looking to get into the trade, but the countdown clock has, say, 3 minutes, for instance, left, do not get into a 5-minute opportunity because it's going to outlast the time of that candle, right? So you will wait for the next candle to open and decide whether or not that trade idea still makes sense for you. That's just a suggestion. For those who do less than 5 minutes, opportunity may still be there. It just depends on how much time is left, right? So if there are 3 minutes left, you want to jump into a trade for 2 minutes, go ahead and do so. I used to do 2-minute trades when I first started, right? But if there's less than 2 minutes left, I'm not going to take the trade. I'm waiting on the next candle for me to then decide. If it turns out that I would have cleared if I had gotten in, I'm not going to have any kind of FOMO. I'm going to be like, okay, I'll just wait for the next idea because you can't get in, you don't need to get into every single trade. Just wait for your great setup and jump in. All right. Next, now we're going to see where do we go to do our analysis once we have everything that we need, right? We go to TradingView, tradingview.com, right? And everybody can set up an account. It's free. You just need to use your Google. That's no alerts needed now. You can use your Google credentials to log in. You don't have to go through setting up a password and all that. When you go to the chart, last week I showed you how to set up your trading view. If you were not there for that training and you need, I can send you that video because I live streamed it. All right, let's remove drawings. Let's get rid of this. Let's get rid of that. Okay. So what I want to do today is talk about the Fibonacci retracement tool. Now, we haven't really been using it, so I just want to talk about it really quick. And if it seems a bit challenging for you, it's okay. This is a little bit more advanced for some people. But once you get the hang of it, it's really not difficult once you start doing it. Right. So let's see. Say we decided that we were going to do Euro JPY, Euro being on the left, JPY on the right. That means price should be going up. There should be an uptrend, right? The market's closed, but maybe it could still have that look to it. I don't know. And you see the pop-up ads. That's because I do not pay for TradingView. It's free to set up. There's a paid version which gives you added features. Okay, so look, you look at this, it said that Euro was stronger than JPY. So I said that would be an uptrend, means we would be looking for buys. And what do we see here? We see an uptrend, right? So we'd be looking for buys. A nice buy opportunity was right here. Okay. So with the Fibonacci retracement tool, what you're looking for is a high and a low for you to jump into a trade idea. Let's see. Hold on. Okay, I have one. Let's see. All right. So the tool, which this is it, you would find it 1, 2, 3. The third area down here, this is the Fibonacci retracement tool. I have it starred so that it is in my toolbox. If you don't know how to get the toolbox here, you can watch that video that I was referencing, right? So let's look at it. When you log in, when you open up the Fib retracement tool, hit one point to the next, hit settings, and you want to have it to these specs. Under style, you want to have the first 5 checked. You want to uncheck all others. And in the second row, second 2 checked, others unchecked. And I'm just copying something that a former educator on the platform had, right? Zero, 0.382, 0.618, 1, 0.705, and over here we have 0.5, 0.75, right? Take a screenshot or write it down so that you can go and put those specs on your fib retracement. And then I have it set as my default, I believe.
Can you scroll up, Alethea? That number.
Okay, Hold on.
When you finish.
Mhm.
Okay, so. And the colors doesn't matter. It's what color you prefer, right?
Well, just as
Mhm.
long as you can see the 0.5 to the
Mhm.
618, that's the most important area, right?
Mhm.
I'm gonna
Okay.
show you why. I'll expand it. I'll put it somewhere else and I'll expand it and talk about it. Oh,
Mhm.
all right. So let's get rid of this. And let's go to a clean. All right. So point 0.5 is an area that I would look between 0.5 and 0.618. I don't know who was on our session with Luis on Wednesday. I used the fib retracement tool. The price was all the way up here, and I said that I was waiting on it to come all the way down to 18. But um, my partner said it would turn around at 24, and it did briefly, but then it came down to that area that I had been waiting on. So this pink area, this rose area, is what you want to pay attention to for an entry from 0.5 to the 0.618 area, right? So let's look at it again. So here, so I have that in red. I have the other stuff in black. I have the 705 in red as well. Um, background is on, but you can take it off. If it's off, you just won't see the shading. You just have the lines. So I have background on, right? I think that's about it. Yeah, I didn't mess with any of the other stuff. I just changed the color. Yeah, okay. So if the background was off, see we do have the lines red, but then there's no shading. So with it like this, I know I needed to come into this rose, this pinkish shaded area. So I'm waiting. I can get in at 0.5, or I can wait to see if it will come down a little bit more. But anywhere between 0.5 and 0.618, this general area is an area of interest for me in terms of getting in, right? Now, here is an example of a trade. Now, when price is going up, when we're in a bullish market, price is trending up, right? With your tool, you're going to start at the bottom and you're going to go to the top. First things first, you're going to mark your level of resistance, the most recent level of support and resistance, right? So this was the level of support. This was the level of resistance. So I drew the lines here. See the orange lines? That's my resistance and my support. And then I use my fib retracement tool from the bottom. Since price is going up, I'm starting at the bottom, right? Start at the bottom and I'm going to pull it up to the top. Price came down and this is where I entered, right? That was the 0.5 and the price is in brackets here. It's 0.70925. So the entry I was looking for was 925 or below. I was able to get in, clear the trade, and get out. Does everybody see that?
I'm a little lost on this still. We haven't done this in so long, and I'm sorry.
It's okay.
I'm lost.
It's okay. Maybe we should get into the market one Sunday night and see if we can find one of these beauties. But you're gonna draw a line at a recent level of support, a recent level of resistance, because you see there's a lower level of support down here, but you want something that's current because price is trending up. So draw a line of support, draw a line of resistance, then you're going to take your fib retracement tool, you're going to put it out, and then you're just going to wait on price to come down to the 0.5, anywhere between 0.5 and 0.618 to get in. Price came to below the 70925. It came down here, which is the 0.5. That's the 50% mark. And then it went back up. It went up. So it's capitalizing off pullbacks that you want to do in Fibonacci. So let me remove that. So looking at this, let's remove this. All right, so here we've ascertained that we're in an uptrend here, right? So what we could have done, this is a level of support. This is a level of resistance. And since price is trending up, you're going to start from the bottom and you're going to come up with the tool, right? And let's expand this. So once this has happened, I would be waiting on price to come down here. Didn't quite make it. It actually came to the 0.38 level, right? 382 level. But I would be waiting on price to come down to this pink area because it's the 0.5, the 50% for me to get into this trade. Anywhere between 0.5 and 0.618. So it just gives you a general area, right? And that's where, if you're in our Let's session, she would make her box. I've noticed that she puts her box and then she gets rid of that. And oh, this is the area that she would be waiting for. So, right, this is the area, and then she'd be doing some other stuff. But knowing that she's waiting. I know it's been a while. We need to see something in real time in order to really get it. And is everybody down with coming on tomorrow evening to see if we could find something happening in the market live, say around 8 p.m. Eastern Standard Time?
Yes.
That's
Okay.
fine with me. I'll be at work, but that's fine with me.
Okay.
Okay.
Okay. All right. So I'm going to do another Zoom 8 p.m. Eastern Standard Time tomorrow, strictly to see if we can find some setups where we can use the Fibonacci retracement tool. And that will be at 8 p.m. Eastern Standard Time. Because I haven't heard anybody say anything else. I just hear that's fine.
Thank you. I'll be there. I need to see it in live action. I've totally forgotten about it.
Okay. All right. So mark it in your calendars. All right. So if you noticed, since price was going up, I started at the base from my fib retracement tool. Let's look at this again. So odd CAD. Since the base is on the right, we know that it's a sell trend. So let's look at odd CAD. AUD, CAD. Right. So we see it's a downtrend. Price looks to be consolidating here. So fib retracement tool doesn't work well with consolidation. Right. Let's see. That looked like it was trending up instead of down. I feel like I'm ringing in my ear. All right, let's just look at this hypothetically. So the same thing, you want to do the same thing. You want to mark a level of support and resistance, right? But now since price is going down, you're going to start from the top and come to the bottom. And look at that. So when price starts from the top to the bottom, go this way, we're still looking for price to be between 0.5 and 0.618. And what do we see here? Can you see? You see that the wicks came right up in there? Yes? It came right to the...
Yes, I see it. I just gotta figure out how to do it.
Move it there. Right. So price, when it's trending down, we put the support and resistance levels, and then we want price to come up to the 0.58, to the 0.5, sorry, between the 0.5 and the 0.618. And it came there twice actually. So we could have done it here. That would have been one clear. And then here would have been another clear. It did it twice. But then once it happens twice, don't look to do it again. I know some of you like to keep going, bam, bam, bam. If it's not a consolidation market, don't be doing that, right? Don't do that, because you know what Christian says, don't rob the same bank twice. Kenver says the same thing in some other kind of way. Let's see a question here. Yes, what she says, exactly. Don't do it. It will bite you. It will bite you. But yes, so that was a good example right there. So it works more in a trending market, like a definite trending market. It doesn't, if it's consolidation, when we have a market that's consolidating, you just want to take buys and sells as it gets to the different to the high and to the low. Let's see. Let's go. Yeah. All right. So yeah, this is consolidating right here, right now. Does anybody have any questions based on what they've seen here? I know it's a little bit to digest, but you just have to rewatch and just practice with a demo account to get this. Price bouncing around in here. I don't trust this though. Well, anyway, yeah. I think that's gonna be it for Saucy Saturday for today. I'm gonna call. Who is MJ? MJ? That's Jamel. But who is MJ? I see an MJ here. And I'm not
I
sure.
was about to say short for Michael Jackson.
Or Michael Jordan. I don't know.
Michael Jordan,
Michael Jordan. I know
that's
Michael
him.
Jackson. Michael Jordan.
You have something against Michael Jordan? Jackson?
I said Michael Jordan. What do you
You have
mean?
something against Michael Jackson?
No, what are you talking about?
I'm just asking you, like you're like,
No, I don't, Michael. No, I'm not. We're not even gonna go there. At any rate, hey, look here. Can I share something? Can I say something
Go
with regards to the trading view?
go ahead.
So I do know this, that I have actually took on doing the paid version account with the 30-day trial, and they do keep you informed of the days. So you shouldn't get caught if you don't want to use it or pay for it outside of that. But for me, I know I have seen a difference with using the paid version during my trial time.
Mhm.
And that's when I know, Alethea, you spoke about the discount. That's when they actually present the discount to you while you're in the actual 30-day trial, which they give 60% off and 40% off depending on which package you use. And so, yeah, but if anyone does want to try it, I would encourage them to try the 30-day trial as you're, I would say, more advanced or been in it for a little while, not starting out new. But I know I've seen a difference from the trial version as a paid version, that I probably would go ahead and just use, at the end of it, get my, I pay for the real one and just pay for it as a, with the discount from there, because again, it's a write-off. If anybody knows anything about tax-wise, it's a business write-off. So other than that,
Brian,
I
what
just wanted to share
features
that.
are you using that you're not using in the free version?
I'm using the same ones. I've actually used the same ones, but I'm able to have multiple, like the indicators that you can swap back out and forth without having to worry about closing one or, backing out of one to be able to use it. I'm using the same ones, but I can, for me, I can tell the difference from using the trial version versus the free version.
So hold on. So the
I'm still learning. Oh, go ahead.
the free version, you have a limit to the number of indicators. So you're saying that you don't have that limit. So that's one benefit that you're saying.
Yes.
Yeah. So that's
Yeah.
one thing that's different. You have
Mhm.
more indicators. What about setting the
Alerts.
alerts?
Alerts, yeah, you can do multiple alerts. You can have several different
Yeah.
alerts.
So have you been using that?
I've done one and it didn't come to my point. So I didn't, I've only done the one.
It
Again, I'm
doesn't
still
matter.
learning.
It comes to your point, but you're able to set multiple alerts.
Yeah.
Yeah.
Yeah, I'm just trying to figure out what you're actually using that lets you know that you're seeing a difference. That's why I asked you.
Well, I'm trying the other, just to
Have you used
look at it and see.
side by side, having multiple screens open?
Yeah, that's the one I want to, and I haven't figured out how to to do that. I'm still navigating through it, but I haven't, you know, if I mean, once I get to that, yeah, I'm gonna do it, but I have not done it yet.
Oh,
I mean, this was remember, I just got it this week when I told you I tried it. So
oh no, but because you're promoting it.
Yeah, you're
Yeah.
saying you see a
Yeah.
difference. So I was just asking what the
Yeah.
difference
Yeah.
is, how you're able
Well,
to tell if there's a difference. Because you're saying it's an improvement.
yeah, it is from what I can see, from just a little bit that I can see. So, I mean, I would say, you know, if you've been doing it like you have, Ty, for a little while, I mean, to do the 30-day trial, again, they let you know the date, so you shouldn't miss out on, you know, if you decide not to.
So what you're saying is that you won't get blindsided with, oh
Right.
snap, they charge me. I was
Right.
meant to cancel and I forgot to cancel. They give you constant reminders, so you have ample time to cancel before the expiration of the free trial.
Uh-huh. Yeah.
All right. One thing that I did not mention when I was doing the trading view overview, guys, was that to add the different currency pairings to my watch list, you can hit the plus sign here and you can add from there, say USD CAD. And remember, I use Owanda. You select that, it populates. See, now it's there, USD CAD, right? That's how you add different currency pairs to your watch list. Okay, that's one way. The other way is if you are looking at something like right now on CAD, I could just select these dots and then come here, add to watch list, check that box, and it's added to my watch list. So, but I don't want these things on here. So there you go. But yeah, actually let me end the live stream. I think this concludes the, so bye out there in YouTube world. I hope